Welcome. I'm Cara Brosnan, Head of Sales for Australia and New Zealand here at State Street. Today, I'm joined by Eric Chng, Senior Managing Director, Global Alternatives. Welcome, Eric.
Thank you, Cara.
Today, we'll be taking a first look at State Street's Global Private Market Study, exploring how leading institutions are navigating a shifting landscape and what's standing out in Australia and across the region. So Eric, let's talk about resiliency. The study shows private market allocations remaining resilient despite a difficult macro and liquidity environment. From your recent conversations in Australia over the past week, how are institutional investors thinking about growing their allocations with greater discipline?
Thank you, Cara. I think the research survey has generally been very positive. Almost all the respondents, 96%, have cited that private markets allocation will continue to be in focus, and they see this as an important part of their overall portfolio construction mix. Now, more than half of the respondents have expectation to increase allocation into private markets in the next 2 years. I think the trend is similar in Australia, which is very predominantly driven by institutional investors. So overall, it's a cautious outlook, but one of optimism.
Okay, great. And linked to that then, we're also hearing an emphasis on pacing and cash flow discipline alongside allocation targets. How is that changing the way institutions approach private markets in Australia?
Generally, I think investors across the world and that in Australia have very similar outlook on private markets. There is a cautionary tale over here where private markets in the most liquid spectrum, in private equity especially, institutional investors continue to look favorably into deploying of capital into that segment. When we talk about liquidity, generally the level of dry powder remain really high in the market, and that's causing a lot of primary investment stress. So being able to deploy capital in a timely manner, I think that's what's going to be top of mind for investors in this region.
Okay. And linking then to, I guess, access more. So, I mean, the report talks about that quite a bit. But as private markets become more widely accessed, how are asset owners as well as asset managers differentiating themselves beyond simply just having exposure?
Sure. I think overall, the key there is specialization, track record as two most important ingredients. So asset owners are increasingly looking for more transparency, more frequent reporting frequency into the underlying asset level performance. The GPs on the other side, the asset managers, are increasingly focused on sourcing of deals in a specialist function to retain their specialization and therefore generating higher returns. The other shift is obviously from an LP environment. They have started moving from a more passive approach to allocating into private markets to a more co-investment and direct sourcing approach. That obviously increases the competition in the primary markets against the asset managers. But I would say in a nutshell, overall, the GPs that have a proper track record over a long period of time of deploying capital, not just returns, is going to be more rewarded.
So I guess with that then, do you see that there is becoming a clear divide between that scale-led versus the specialization-led strategies?
I think the specialization part is going to outplay the scale-led. However, the track record I alluded to is also citing to the fact that most GPs that are managing more assets under administration tend to have stronger track record. So I would say that scale and specialization are equally important in that respect.
Right. You mentioned obviously LPs and the GPs, and we spoke a lot this week about the convergence and what we're seeing in this space, and I guess how the relationship is being rewritten. As allocations and investors become more sophisticated, can you speak a bit more about how you do see those LP and GP relationships changing?
Sure. I alluded to the earlier question. The relationship between an LP GP used to be one where fundamentally an asset owner allocates through a strategic and tactical asset allocation basis, and private market being one of the composition of their portfolio mix. It tends to be more a dispersion of capital managed by a specialist GP. Now, as a lot of asset owners are gaining insights of their underlying investments, they are moving more towards a co-investment structure where they can get to pick specific exposure to give them a better returns profile. And lastly, I would say that the more sophisticated asset owners have now moved more direct into the markets where they are either directly investing into primary deals or co-leading deals. And that's going to be a trend that will continue.
Let's hone in on private credit a little bit. I mean, it's been very topical this week, and one area obviously that stands out in the report is private credit, and particularly around APAC. Private credit allocations are increasingly, I guess, more strong in APAC than in other regions. What role do you think is private credit playing in portfolios that feels different to what you're seeing, I guess, from, globally, but also in prior cycles?
Sure. Within APAC, we are seeing a lot more bullishness in terms of the research data. 52% of respondents feel that private credit remain a very attractive asset class here. I think there are two reasons for the more bullishness of the outlook. Number one, a lot of GPs within the region tends to be specialists, and the ability to deploy capital and generate higher returns as compared to other regions is much better. Secondly, there's less competition from GPs that we're talking to in the primary markets due to the accessibility of each of the market being very structural and fragmented. So overall, I think the bullishness is well rewarded by investors willing to allocate into the private credit as an asset class. And lastly, private credit is also one of the, I guess, fuel to investments across the primary markets in the region. And there are other strategies that are very linked, real estate underlying as well as private equity underlying. And these credit managers continue to find attractive opportunities to deploy in a very specialist manner.
So do you think we'll see more growth in this area and that this momentum will continue?
Whilst investors remain bullish over the next 12 to 24 months, the actual State Street research data has shown that fundraising has actually fallen. Investors remain optimistic, I would say. However, the pace of allocation may not be as rapid as what we've been seeing over the last 5 years.
Okay, great. I want to pivot slightly now to more operating models. The study makes clear that liquidity, valuation, and governance and reporting are not just kind of back office issues anymore. In your perspective, what does good look like from an operational discipline? What does it look like more in private markets today?
Good increasingly has become more a public and private market view of a total portfolio approach. Investors are no longer seeing private market as a very disparate asset class. And so the convergence of public and private market has meant that the ability for them to generate insights, not just at a portfolio level, but at a strategy level, will increasingly be important. Secondly, there's a convergence between open and closed-ended structure. So as we move from liquid to illiquid spectrum of private markets, the ability to bring in deal level information and attribute this across different type of fund structures, now that's driving a lot of data challenges and will continue to be a main focus. And lastly, I will touch on quickly at individual deal specific level, each investment is now becoming more complex. A series of co-investment and credit structures has meant that there's a convergence of different way we see private market asset classes into hybrids.
So speaking of complexity then in the operating models, because obviously everything you said does allude that there's a lot more complexity in public to private and how these operating models need to support this. What separates a scalable operating model from one that simply just manages complexity?
I think to make an operating model for any investor truly scalable, there are three main areas that you have to consider. The first is the unstructured data of each private market asset class will remain very fragmented. The ability to leverage AI and ingestion technologies that can automate and digitize, that's going to solve for, I would say, 60% of the pain point that most of our investor and asset manager clients feel. The second area is going to be the ability to transform this very disparate information after you digitize it into a data taxonomy that maps across public and private market. And lastly, the ability to then use this data to generate insights requires capabilities not just at a financial level, the ability to merge asset level insights into financial records and thereby generating deal by deal level insights that front office can use to generate alpha. So this will be the three main challenges.
And I think with AI, it's quite exciting in terms of the opportunity it presents in
Yeah.
the areas of private market. How far away do you think we are from really having AI transform and help us become more efficient in the operating models as it relates to private markets?
I think within the world of private market, AI is already transforming the way we work. In certain areas like ingestion technologies, AI has matured to a level where we can digitize huge amount of unstructured data and therefore leading to more efficiency. AI is also being deployed very extensively in the entire life cycle of the deal in areas of reconciliation and increasingly on the reporting side. So definitely we're seeing an uptick and exponential growth in the adoption of AI, not just here, but across the market. And this will continue to be a trend.
Eric, thank you. It's great to hear your global perspective, particularly as that aligns with what we're hearing from our clients here in Australia today. For those watching, we invite you to read the private market study for a deeper look at the trends shaping private markets today.